All right. So today I wanted to talk about two things. The first being the difference between an investor and a trader. Because some people just kind of throw those terms around as if there's no difference. But they can be quite different in their approaches, their mentality, their sensibilities, so on and so forth. And then the other thing is the ability to deal with volatility. I believe that the ability to deal with volatility um, can separate those who win in investing and those who lose. So this is a perfect day to do this. As you can see here, the Dow is down 2.51%, 872 points. Kind of reminds me of March of 2020 when you had these 800, 1,200, 1,000 point days, so on and so forth. And so you can see here, you can see on my screen here, $15,263.47. The account is down today. And earlier today, that was actually close to 20, I believe. It was 18, 19, 20. And so if you have the mentality of a trader, you're going to say, oh my God, I need to do a stop loss, or I need to control this in some way. But as an investor, those with the spirit of an investor, volatility like this generally shouldn't bother you as much because you're not getting in and out of positions. You've done your research, perhaps on intrinsic value of a company, or you're looking for over the long term. And this is just kind of noise. So, March of 2020, in fact, I actually have it up here. You can kind of see on the screen here. This is, let's see here. So you can see like February 21st, I was basically at 360, 359,974. Went all the way down. So let's grab a nice little calculator here and we'll do the math. So let's do it that way. So we got let's do it. 3. So let's see, Wednesday. So we got 365, 567, 91, and we went all the way down. Minus, where is it here? It was like 203. Yep, 203, 260. 203, 260, 80 cents. So in 1 month's time, I was down $162,307 just in this account. Mind you, I have interactive brokers. I've, at the time, which I think was probably either Motif or Folio, I'm not sure when it was changed over, on some other smaller accounts. So just in this one brokerage account, I was down $162,000 because there were multiple days like this, right? You see the 15,000 here, and then the futures would open and you're down another 1,000 points. So many people did they cut and run. They panic sell, and no one ever gets rich by panic selling. But people often get rich from buying from those who are panic selling. So that's what I did. You can see, March 18th, I was at 203,000. What I did in this particular strategy here was I bought the most distressed, out of favor sectors. So I bought cruise lines, airlines, hotels, energy, and basically, you can see what that's done. I mean, these aren't fake numbers. These aren't like, oh, this is what you should do if this ever happens. Like, this is an actual sort of a play-by-play from 2020. And I feel that I was able to achieve this not only studying great investors like people like Carl Icahn and Warren and Charlie at Berkshire and Templeton and Lynch, and just reading, studying the habits and the temperament of great investors. But actually what I did at the time is I read every single book I could find on depressions and studying patterns of those. So I may forget one or two, but I was 1837, 1873, 1896, 1907 was a big one, the Panic of 1907, 1929, of course. You kind of had it again in 33, 34. And then another one, I think Warren and Charlie talked about that 73, 74, 1973, 74 was the worst time for them in investing. And then you had obviously 1987, 1999, 2000, the tech wreck, 2008, and then what one might call the panic of 2020. And so, but you can see 203,000 by buying distress and sitting on other positions, basically sitting on my hands. This is at 605. So let's do it this way. So 605, 178. And was July 14th. 28 minus 60, 80 cents. So between March 18th, 2020, and that was what, July, what did I say, 7th or something, 9th, $401,917. So I basically made a fortune in the panic of 2020. And I did that again by holding existing positions, adding to the most distressed sectors, dollar cost averaging, and taking option premium to buy those particular distressed sectors. So again, we have sitting on existing positions, dollar cost averaging, taking option premium, and reinvesting that in the distressed sectors. And of course, when I say sitting on existing positions, I would also kind of add dividend reinvesting into that, because what's going to happen, you're going to get dividends, and then they're going to buy things on the cheap at that time. So that's how I made 401,000. It's not. I remember an interview with Aaron Ross Sorkin and Carl Icahn. And he's like, it's not difficult. It's hard to do when it's happening, but which is, you're buying things that no one wants when you're buying, and then when you're selling these things that you're selling that everyone wants, and they're kind of manias. So, in this particular situation, you can probably look at the biggest down stocks today, the biggest up. I was talking to a friend of mine, the great Logan Kane, and I think he mentioned that it was like Kroger, Clorox, a couple others in that vein were up, and the traditional, the cruise lines were down, energy was down, big. So if this continues, if tomorrow's another $15,000 day, if this persists, you can bet that I'm going to be hunting for the most distressed sectors, and I'm going to be purchasing sector ETFs generally, because that way I take out individual stock risk if one were to go belly up and actually go bankrupt. But by buying the sectors essentially that are suffering the most, I feel you get the most upside. So again, that's kind of how an investor is going to look at this. And then these are things that I'll hold probably in perpetuity. As Warren Buffett said, my greatest, my favorite holding period is forever. So a trader is going to look at a situation like this and kind of get in and out. What's going to happen tomorrow, and should I be short this sector and go long this sector, and should I buy this at 1:00 and sell it at 1:50? Okay, and Jack Bogle has a wonderful book on this, where he really fleshes this idea out in much more depth and erudition, and it's called The Clash of Cultures. So it's sort of the investing culture versus the trading culture. So you can see just by my tone and how I'm describing things, I generally side most with the investing culture. But for those of you who follow my Seeking Alpha essays and some of these videos, you can see that I'm building systems of trading in Composer, a really cool software company that I'm basically obsessed with recently. So that would be part of the trading culture. So I can't sit here and say, oh, I'm only Warren Buffett, Jack Bogle, buy and hold, intrinsic value, fundamental investing. Because I do things with options. I do, I'm getting much more in building these kind of systems based on back testing, which is the opposite. But for this account, at least, it's much more fundamental. It's much more old fashioned. And you can see I made 400,000 since March of 2020. So that's what, like a year and a year and 4 months. I mean, so there you go. So yeah, that just kind of further explains basically what can happen when you have courage and you can think long term and you can buy things that everyone's panic selling and so on and so forth. So it'll be interesting to see if today's huge decline and we're at 328 and we're down 874 in the Dow to 2.5. So the Dow is down much more than the S&P, 2.05, 2.03, and then the Nasdaq isn't as down as much. You can it'd be cool to see, like, is this just a little bit of noise and Delta variant panic, or is this going to be like kind of another March of 2020? Kiyosaki talks about this. He says, I get rich in market crashes. And you can see I did. I mean, this isn't bragging or just like, oh, I can get rich in a market crash. Let the market crash again. On paper, I'll be down hundreds of thousands of dollars. Maybe my million will go down to 600,000 or 700,000. But I feel on the other side of that, when I come out of it, that's not going to be a million or $1,000,001. It's going to be $1,000,004, $1,000,005. So yeah, so that's pretty much it for today. I just wanted to kind of do a little video on a day like this when people's accounts are hemorrhaging. On paper they're down big. It's just kind of like look for opportunities on things that are the most hated. Sit on your existing positions, reinvest your dividends, don't panic. And that's, I guess, the final point I'll make here before I sign off today is I just kind of think everyone's built that way, but the older I get, the more I realize that most people aren't. And that is the ability to deal with volatility is a superhuman power in investing. Let me say that again. The ability to deal with volatility is a superhuman power in investing. So I realized that not many people could just look at this and see this 15,000. Let's add another zero. That's 150, or whatever the amount is, and just be okay with that. It's human nature to want to do something, to want to take action, to remedy it or fix it. And a lot of times that's selling at these times to kind of preserve capital. But if you can think long term in situations like this, if you can stomach volatility, you'll outperform people with IQs of 180 who can't deal with volatility. So, it's fascinating to me also. What's the volatility today of Berkshire Hathaway? Well, they own Kroger, so maybe it's not as bad as but what's the volatility today of people that have $1 billion portfolios? Maybe their volatility today is in the hundreds of millions. So just 10x this. This is 5.8 million. This is 150,000. So yeah, just if you can train yourself to be able to stomach these things, you'll do much better. That's also why Fidelity in their study, that they did, those who they did a study on their best performing accounts, and it's dead people and those who forgot they had accounts because they're not tempted to log in on days like this, take a look and say, oh, I need to sell, I need to do this, I need to sell my stock to go to bonds, or I need to sell my bonds and go to stocks. They're not tinkering, and so that's pretty much it for today. Don't panic sell and endure volatility. Take care. Ciao.